Keyman Insurance. It sounds like a safeguard for businesses facing the loss of a crucial figure, but what if this safety net has a dark side? What if it's being used to exploit businesses and the very people they rely on? The concept is simple. A company insures a vital employee, and if that person dies or becomes incapacitated, the company receives a payout. On the surface, it seems like a prudent business practice, but like any tool, Keyman Insurance can be misused, its original purpose twisted to serve greed and self-interest. The story of Keyman Insurance begins in the early 20th century. Its original purpose was noble, to protect businesses from the financial fallout of losing an indispensable employee. However, the allure of profit soon cast a shadow over Keyman Insurance. What began as a safety net gradually morphed into a financial strategy, a way for companies to profit from the very people they claim to be protecting. The financialization of Keyman Insurance marked a turning point. Over the decades, it became entangled in scandals, lawsuits, and accusations of foul play, its original purpose tarnished by greed. The true cost of Keyman Insurance's transformation isn't just measured in dollars and cents. It's measured in the lives impacted, the families torn apart, and the trust shattered when human beings are reduced to assets on a balance sheet. Imagine a young musician, bursting with talent and on the verge of stardom. A record label, eager to cash in on their potential, takes out a hefty Keyman Insurance policy on the artist. The music industry is just one arena where the misuse of Keyman Insurance has come under fire. From corporate boardrooms to Hollywood, the same disturbing pattern emerges, a prioritization of profit over people. In the complex world of finance, Keyman Insurance stands out for its seemingly straightforward premise. It's a life insurance policy but with a twist. Instead of an individual taking out insurance on themselves and naming a loved one as the beneficiary, it's the company that holds the policy and receives the payout. The insured individual, often referred to as the key man or key person, is typically someone crucial to the company's operations and financial well-being. The rationale behind Keyman Insurance is rooted in risk mitigation. Businesses, especially in their early stages, are vulnerable to significant financial setbacks if a key person is no longer able to contribute. The appeal of Keyman Insurance lies in its promise of stability and continuity. Businesses operate in an unpredictable world, subject to market fluctuations and unforeseen events. For small businesses and startups, heavily reliant on the vision and drive of their founders, Keyman Insurance can be particularly attractive. The loss of a founder can be devastating, not only emotionally, but also operationally. A Keyman Insurance payout can provide the necessary capital to keep the business afloat, giving the remaining team time to regroup. Beyond startups, larger companies may utilize Keyman Insurance to protect against the loss of executives with specialized knowledge or invaluable client relationships. While the original intent behind Keyman Insurance was rooted in protecting businesses from genuine risks, the allure of financial gain paved the way for its gradual distortion. What began as a safety net morphed into a tool for financial manipulation. Companies started insuring rank-and-file employees, often without their knowledge or consent. These policies, cynically dubbed dead peasant insurance, turned the lives of ordinary workers into commodities. The ethical implications were staggering, reducing human life to a line item on a balance sheet. This perversion of Keyman Insurance set the stage for a wave of scandals, lawsuits, and ethical debates. The music industry often serves as a stark example of Keyman Insurance's descent from safety net to potential exploitation tool. Record labels have long utilized Keyman Insurance to protect their investments in artists, but the line between protection and profiteering can blur. Imagine a young musician signing a life-altering contract with a major label. The label, recognizing their potential, invests heavily in their career. But this investment comes at a price. Often, a hefty Keyman Insurance policy is taken out on the artist, with the label listed as the beneficiary. The death of XXXTentacion, a young rapper, raised eyebrows and sparked a heated debate about the ethics of profiting from an artist's untimely demise. Corporate America. The chilling reality of dead peasant insurance. The term dead peasant insurance entered the public lexicon, revealing a dark underbelly of corporate greed. Large corporations began taking out key man insurance policies on their rank-and-file employees without their knowledge or consent. Walmart became the poster child for this controversial practice, facing intense scrutiny and legal battles. The company had quietly taken out thousands of these policies, listing itself as the beneficiary. The ensuing legal battles forced Walmart to pay out millions of dollars in settlements and prompted calls for stricter regulations. Lights, camera, exploitation, the ethical tightrope of Hollywood insurances. Hollywood readily embraces key man insurance to safeguard its multi-million-dollar productions. Imagine a blockbuster film with a renowned director and a cast of A-list stars. The studio insures the director, the lead actors, and key crew members. Should one of these individuals become unable to fulfill their contractual obligations, the studio faces potentially catastrophic financial losses. The tragic death of Heath Ledger sparked a conversation about the immense pressure actors face and the need for studios to prioritize their well-being. The playing field of profit athletes as commodities in a high-stakes game. The world of professional sports presents yet another arena where key man insurance has become both a necessity and a source of ethical debate. Athletes are vulnerable individuals susceptible to career-ending injuries. For teams and sports franchises, key man insurance provides a financial safety net. However, the emphasis on competition and winning creates a breeding ground for potential exploitation. The ethical dilemma is clear. When does a team's desire to protect its investment cross the line into exploiting the very athletes they claim to support? When insurance policies incite murder, the Corey Martin case. The dark side of key man insurance can provide a motive for murder. Corey Martin's case shows how greed can turn ordinary people into criminals. In New York City, Martin plotted a sinister plan. He took out a life insurance policy on an unsuspecting woman. Her life became a commodity for his financial gain. Martin murdered her, staging it as an accident. But justice caught up with him. The investigation exposed his plot. Martin's trial shocked the city, revealing the dark side of financial instruments. Corporate greed on trial. Walmart's dead peasant insurance settlements. Walmart faced lawsuits for secretly taking out life insurance policies on employees, profiting from their deaths. This practice, known as dead peasant insurance, sparked public outrage. Walmart eventually settled for millions, but the scandal tarnished its reputation. The controversy highlighted corporate greed and ethical bankruptcy. Dr. Emmanuel Hostin, a renowned orthopedic surgeon, is accused of a $450 million insurance fraud. Misusing key man insurance, he allegedly performed unnecessary surgeries to generate fraudulent claims. Patients trusted him, unaware of the risks and deceit. The lawsuit seeks $450 million in damages, shaking the medical community. Key man insurance can create a chilling paradox. Companies profiting more from death than life. This morbid calculus reduces human life to a line item, warping ethical boundaries. Imagine a star athlete, insured heavily by their team. If they die, the payout might exceed their projected revenue. This creates a perverse incentive, valuing death over life. The profit paradox extends beyond sports, affecting various industries. Corporations might find it more profitable to collect on insurance than to invest in safety. This moral minefield measures human life solely by financial impact. The misuse of key man insurance often thrives in a culture of silence where fear, loyalty, and a reluctance to rock the boat prevent those who witness or experience exploitation from speaking out. This silence, whether born out of fear of retribution, a desire to protect one's career, or a sense of helplessness in the face of powerful institutions, allows unethical practices to persist and even become normalized within certain industries. Musicians, particularly those new to the industry, might feel pressured to sign contracts containing clauses about key man insurance without fully understanding the implications. They might be hesitant to question their labels, fearing that doing so could jeopardize their careers or brand them as troublemakers. Athletes, driven by a relentless pursuit of their sports and often bound by contracts that limit their autonomy, might feel obligated to play through injuries or return to competition before they are fully healed, fearing that doing so could jeopardize their standing with their teams or lead to accusations of weakness. Employees in corporate settings, particularly those in low-wage positions or those fearing for their job security, might be reluctant to raise concerns about dead peasant insurance policies, even if they suspect something is amiss. They might fear retaliation, blacklisting within their industry, or being labeled as disloyal or ungrateful. This culture of silence, perpetuated by a complex interplay of power dynamics, financial pressures, and a fear of the consequences of speaking out, creates a breeding ground for exploitation. It allows those who benefit from the misuse of keyman insurance to operate in the shadows, their actions shielded from scrutiny and accountability. In an era where financialization touches every aspect of our lives, it's essential to reclaim the moral imperative in business practices. Keyman insurance was meant as a safety net, but its misuse demands reassessment. The stories of exploited musicians, pressured athletes, and torn families remind us of the human cost. Reclaiming ethics requires transparency, regulation, and a cultural shift towards human dignity. Our interconnectedness demands ethical conduct. Rewriting the rules, the urgent need for regulatory reform. The misuse of keyman insurance exposes a need for regulatory reform. Outdated laws fail to prevent unethical practices. We must rewrite the rules to protect individuals and restore trust. Enacting legislation for informed consent is crucial. No longer can we tolerate a system where people become commodities. Informed consent ensures individuals have a say in decisions. Establish clear guidelines for keyman insurance policies. Reasonable limits mitigate unethical behavior. Empower regulatory bodies to oversee the insurance industry. Conduct audits and impose penalties for non-compliance. Robust oversight ensures ethical conduct and deters exploitation. Shining a light transparency as a weapon against exploitation. Transparency is a powerful weapon against the misuse of keyman insurance. By shining a light on insurance policies and corporate decision-making, we foster accountability and reduce exploitation. Companies must disclose all keyman insurance policies, including coverage details and beneficiaries. This transparency allows for greater scrutiny and accountability. Knowledge is power. Empower individuals with information to protect their interests. Embrace transparency to create a system where exploitation is less likely. Section 3. From corporate immunity to accountability. Shifting the balance of power. Corporations have long operated with impunity, shielded by legal loopholes and powerful lobbyists. We must shift the balance of power towards accountability and ethical conduct. Strengthen legal frameworks, close loopholes, and increase penalties for wrongdoing. Impose fines, revoke licenses, and hold executives liable. Deter unethical behavior by increasing its cost. Empower individuals to seek justice with legal aid and support. Ensure access to the legal system for all. Create a just and equitable system. Foster a culture of whistleblowing with safe reporting channels. Protect and celebrate those who expose wrongdoing. Create a culture of accountability for a just society. Reclaiming the narrative of human worth. The journey through keyman insurance reveals the human cost when financial incentives trump ethics. A tool for stability twisted into exploitation, obscured by greed and disregard for human life. Amidst this, a call to action. Every life holds intrinsic worth beyond dollars and cents. Stories of exploitation demand we do more than bear witness. They challenge us to reclaim the narrative, focusing on human dignity. It's time to recognize the inherent worth of every individual, reject reducing a person's value to their earning potential, demand transparency and accountability, championing human dignity over profit. Section 2. From darkness to light, building a future where lives matter more than profits. The path forward, while challenging, is illuminated by the same principles that have guided humanity's moral progress throughout history. Empathy, compassion, and an unwavering belief in the inherent worth of every individual. It's about recognizing that a just and equitable society cannot be built on a foundation of exploitation, where human lives are treated as mere commodities to be traded, insured, and profited from. Building a future where lives matter more than profits requires a fundamental shift in perspective, a move away from the narrow lens of self-interest and towards a broader understanding of our interconnectedness. It's about recognizing that the pursuit of a just and equitable society is not a zero-sum game, where one group's gain must come at another's expense. We must challenge the notion that greed is good, that profit maximization justifies all means, and that corporations, driven solely by the bottom line, are incapable of ethical behavior. It's time to demand more from our institutions, to hold them to a higher standard, and to create a system where ethical considerations are not an afterthought, but rather an integral part of every business decision. This requires a multifaceted approach, one that encompasses legal reforms, regulatory oversight, and a cultural shift that values transparency, accountability, and a commitment to the common good. It's about rewriting the rules, shining a light on unethical practices, and empowering individuals to hold those in power accountable for their actions. Section 3. The power of collective action. A shared responsibility to safeguard human dignity. The challenges we face are not insurmountable. History shows collective action can overcome intractable problems. The fight against key man insurance misuse is no different. It demands our attention and belief in collective action. Each of us has a role to play. As consumers, support ethical businesses. As investors, demand ethical practices. As citizens, urge stronger regulations. The road ahead is long, but the goal is worth it. Let us embrace this challenge with courage and determination.